Morning folks, James here. Let's talk natural gas and crude oil. I'm going to open up the natural gas chart here. Bit of a bid going on here. As you can see, we broke out over the weekend, gapping over this wedge top. And now we're above the wedge top, the 20 and the 50, and now the 100 period moving averages. Notice that the 4-hour RSI is now in an overbought situation, so we need to be a little wary of that, and we are approaching resistance. In fact, the level that I last sold at 3.13. Looking up above now, there are several gaps that we've still got to close. There's one over there, and one over there, plus a rollover gap over here. So loads of gaps and lots of support now below us, as we've now bounced not only out of the trend bottom, but we've closed significantly above the wedge top. Let's go to the day chart quickly and have a look. And also here on the day chart, we're now touching the 20 period simple moving average, which is a natural resistance. We've got that swing high and this Fibonacci level at about 3.15. You can eyeball the gaps to the left here on the day chart too. And also notice there are two targets on this page now. First of all, 3.5, that's the confluence of the 50 period and the 200 period moving average here on the day chart. And then above there, the general point of control on all natural gas charts at 3.75, which is my first target. If we do approach the 375 level, expect something like this, a little push through it to close that gap at the center of the page. And once that gap's closed, perhaps a little retest of the 375, slightly lower maybe level, and then a bounce out of there into my ultimate target, about $5. Zooming out on the day chart, it takes us right back up to the top here. But also, it's probably not going to be as quick as this because we are entering the shoulder season, and March and April tend to be a little bit negative for natural gas, so perhaps this needs to be delayed somewhat, and we could actually pull it across to sort of mid-March, like that, and we might expect some faffing around in the range ahead of that. Something like this. Not very well drawn, but you get the idea. So yeah, maybe a month or two of faffing around within this range. So watch 3.5, 3.75, and of course the current level that we're at right now at 3.13, which is the first resistance, the 20 period moving average, and the swing high, and the Fibonacci level that I was talking about. So generally that purple path, although it's not very well drawn and it's quite messy, is the sort of idea. But it is possible we could actually bounce out of here far more quickly than that and just break the seasonal pattern for a little while. So that's the plan. I'm still long. And going back to the 4-hour chart, I'll add some more size if we manage to get up through that level, that swing high, retest it from the top, maybe a little bit deeper, and then take off. So this level here would make an ideal level to get long again on a retracement if we manage to break out through the top and retrace like that. Folks, have a great trading day. Be careful out there. It's very, very tricky, particularly with energies and metals with the Iran war going on. So trade safe, trade small, be nimble, be careful, and don't bag hold. See you in the next video. Take care. Oh, and make sure to like and subscribe if you enjoyed the video.
Monday morning, kettle on, charts up, dressing gown half done. She's winking from the ticker tape. Patty Natty says you'll escape. Tuesday tease, I size the stage. Tiny spread, big heartache. Green flash, then a crimson flood. Mouse click, coffee turns to mud. I do the corn tango, tango with Patty Natty. Forward curves, all curvy and catty. One step